In this video, I'm going to give you some brutally honest truths that will give you an unfair advantage in your trading, both from a technical and a mental perspective. The first one is trying to profit from everything leads to profiting from nothing. Profitable trading is having an edge. An edge is something that does not occur every single day or every single minute. An edge showing itself can be rare, but that's the whole reason why it's an edge in the first place. If an edge is always present, then it's not an edge. The point I'm trying to make is that you need to stop creating this idea that you need to profit from everything. Pick your poison. Now let me explain this a little bit more, because an edge in the market is essentially a certain pattern in the market that repeats itself. And because you have that certain pattern that repeats itself, that eventually can then be profitable. Now the way you find that edge is by first defining which concept resonates with you. I make a lot of different videos here about fair value gaps, fair value areas, about liquidity, etc., etc. Not everything might resonate with you, and that's perfectly fine. But you need to find the thing that does resonate with you, because that's important to understand. That's going to be your foundational concept, your concept, what your trading plan is going to revolve around, essentially, that you're going to use. Then once you know what that concept actually is, the first thing you want to do is turn it into a process. In other words, a trading plan. Because the way you consistently find that edge, so that pattern that repeats itself, is by having some guidelines that you can stick to. And those guidelines are essentially your trading plan. And we can define that a little bit more, because a trading plan always consists of 5 foundational levels. The first foundational level is going to be the buys. So the first thing you do when you open a chart is going to figure out, are we going higher or lower? Essentially the direction. The second thing is narrative. So if we are going higher, where are we going higher from? The third thing is the context area. So where you are going to look for the 4th foundational level, which is your entry. And then the 5th thing is your risk management. Now, depending on the concepts that resonate with you, you are going to place those concepts within those foundational levels. And that then creates a unique trading plan that resonates with you. So for example, for me, bias is mainly determined through the PD rates, so fair value gaps and fair value areas. So for example, this fair value area right there failing, and because we have new fair value gaps going higher right there, it tells me that we are bullish. Then foundational level number 2 is narrative. So if we are going higher, then this fair value gap is where I want to look for my entry. That's what we're going to continue higher from. Then eventually skipping over to foundation level number 4, the entry right there, I use candle signs, for example, to enter off of this trade. And this is then a trade that I actually took as well. Now for you, these concepts might be different. You might, for example, use market structure as your foundation level number 1, your bias. Or you might even use market structure for your entry. And that's perfectly fine. When that resonates with you, that's what you want to use. And when you have an idea of what you're waiting for in the market, trading becomes this very funny, simple game, essentially. Now, there is going to be quite a lot of struggles that you are going to run into. And we're going to discuss those later on in this video as well. But the first thing and the next thing is to actually find those struggles. So you want to not avoid struggles, you want to take them head on and find them first. That leads me to the next thing. Your trading plan at first is not going to be perfect. Accept it. Perfectionism kills your consistency. And no consistency means no improvement to get any closer to perfect. A perfect trading plan is a profitable one. In order to reach it, you need to consistently make mistakes and learn from them. Moral of the story, just start trading and embrace mistakes. So you can read a lot of books about the theory of swimming, etc., etc., but you need to jump into the water sooner or later. That's the same in trading. And more specifically, what I think nowadays happens is with all these tools around you, these replay backtesting tools, people are sort of fooling themselves, thinking that they are making progress by replay backtesting or doing some demo, when all they're actually doing is trying to avoid the pain of really trading. Because let's face it, when you trade live or there's something really on the line, it's quite scary. Over time, talk from experience, you will be able to deal with it a lot better. But the first few times you actually need to live trade, it's very scary. But it's only really scary if there's something on the line. And that's important to understand. Because when there's something on the line, that's exactly what you want. And because it's scary, you're going to experience pain. But because you're going to experience pain, you're going to learn a lot faster from the mistakes that you make. When there's nothing on the line, like replay backtesting or demo, you can simply click a free button and everything will be reset. There's There's no pain involved, no real pain. Now, it might be quite radical, but again, it doesn't have to be, and not financial advice, you don't have to put a crazy amount of money into trading to learn it, as long as there's a little bit on the line. Because like we mentioned, finding these struggles, so finding the mistakes, that's the most important part. At first, you're not going to be perfect. People always say, well, you need to have quality over quantity. And this is true. But at first, you have no clue what quality even is. So you just need a whole lot of quantity to find what quality actually is. So when you take that process, that trading plan, and you start live trading as soon as possible, not financial advice, then you're going to run into a lot of struggles and a lot of mistakes. But that's exactly what we need. It leads me to the next step. If there's no reflection, there's no improvement. You can say you've been trading for 5 years, but if that's 5 years of making the same mistakes, then all you've done is waste your time. Trade, journal, do a study around what you can improve on, and trade again. So when you do start running into those mistakes, or you feel the pain of losing trades, your fight or flight gets activated. So either you fight those mistakes or you flight. So you run away and you find something new. You want to fight the mistakes. And this is why it's so important to find the thing that resonates with you, because then you're more likely to stick to it as well. When you fight those mistakes, you're actually making process. Whereas if you run away from the mistakes, so for example, you have one process trading plan and you recognize the mistakes, but instead you completely throw the trading plan out the window and you find a new YouTuber who introduced this new thing, and all of a sudden you think, oh wow, perfect, let me just use that instead. You create your trading plan again. You're going to run into the same mistakes or similar mistakes, but you need to fight the mistakes, not run away from them, because then you're just starting this cycle again. You're just wasting your time. The way you go about this is by live trading. So when you start live trading, and in MMT, I'll give you an example. We had this trading plan module where I took a live account on futures, and I had an initial trading plan, and I just simply started trading it live. Once I started trading it live, I started to run into these different mistakes that I was making. So what you want to do is you want to identify the mistakes that you're making and filter them out before you start trading again. Now, the way you go about this is, let's take an example. Something I struggled with, and this is how concepts in itself also get created. So everything you see here on this YouTube channel, it went exactly through this process, essentially. One problem I had is I struggled with fair value gaps in the past. So some fair value gaps were holding, some fair value gaps weren't. So I decided, okay, this is something I need to study, because this is costing me trades. And this is then what leads to doing a case study, which ties in directly also to the next point. Study the chart and you will find your own concepts. It's in your human nature to recognize patterns. You don't need someone else to tell you the concepts. Now, to add a little bit more nuance to that, of course, a mentor is great to sort of fast track that progress. But as I just mentioned, and as some of you may know, most of the concepts that I teach here are completely my own, because I again did those case studies. And the way you do case studies is the following. You have this problem that you identified. So for example, the problem that I had with fair value gaps. You take a notion or anything. Again, I need you to understand, there's no perfect way to do case studies as long as you just do them. But take something where you can actually write down your thoughts. And when we take a look at the problem that I had, for example, with these fair value gaps, then you just start marking out in hindsight again the fair value gaps that you have. So for example, you have this fair value gap. You also have this fair value gap right here. And then you also have a couple of different fair value gaps that are sitting right here. Then eventually what starts happening when you start marking these out, you start noticing patterns, because again, you have a brain. You have a brain, hopefully. So you start recognizing these patterns automatically. And what happens eventually is that, for example, we see that the fair value gaps with a third candle being somewhat of a consolidation actually have a higher chance of holding, where these fair value gaps right here that have a third candle expansion, then the next candle, so the fourth candle, is coming back into that fair value gap. So what should have been potentially a breakaway gap have very low probability of holding. And now you have learned something that you didn't need anyone else to tell you, that you can now take with you into the next trade. Now, when I say that, take it with you into the next trade, you don't necessarily need to add that to the objective part of your trading plan. So within those foundational levels, you can have that as experience. A trading plan consists of this 80-20 rule. So 80% is going to be objective, 20% is going to be subjective. And that's exactly what you want, because that 20% right there, that's where your edge is mainly also going to be. It's when you start building that experience through those case studies, for example, and through simply trading and giving it time, where you start improving a whole lot. So where your win rate, your returns increase. Now, and then after, what you'll start seeing is, hey, my trades are all of a sudden getting a lot better. That leads me to the next point. As a profitable trader, journaling is just as important as a beginning trader. Don't get lazy, it will come to haunt you. So to add a little bit more context to that, when people feel like they're on top of the world, they think journaling is not necessary anymore. Well, on the contrary, it's just as important. And let me explain why. Because when you feel like you're on top of the world and things are going very well, you do want to document it and you do want to journal it for when things, after a while, start to go downhill again. So for example, you have a really good time, perfect. Then after a few months or a week or the next day even, all of a sudden you feel like the whole world is against you and every trade you do is just a losing trade. Then the first thing you want to do is take a look at your journal and see, hey, am I doing something different than I was before, or am I doing the same? Because what I tend to notice in myself, but what I see as well in students that I mentor, is that if you don't actually look back at what worked, is that with time, you slowly start to stray from the path that actually worked. So what I mean by that is that people, if they don't journal, they don't look back at what they're doing, at what actually worked, they slowly start to forget this and they slowly start to add things into their mind. They slowly start to stray away from what actually works. Now, journaling, again, is same as case studies. You don't have to do it perfect. There's no perfect way of doing it as long as you do something. I'll put a simple Notion link in the description right here so you can use it for free with just a basic journal that you can start using. Now, then one thing that I put a lot of emphasis on, which I think is very important, is the following. Why most people don't succeed? Drowning in negativity. I have never met someone that is successful and extremely negative at the same time. Avoid negativity at all costs. It poisons your brain, your creativity, and even your will to live. Be careful with what you consume. When you start going through this process, it helped me a lot, at least, to consistently look for the tiniest positive changes that were happening in my trading. For example, last time I put my stop loss in the wrong place. This time I put my stop loss in the right place. Perfect. It's a positive change. This creates this upwards spiral essentially. But on the contrary as well, of course, if you consistently find negative things about everything and you're constantly in this negative mindset, you're always going to have a downwards spiral. Now, positivity doesn't mean faking things. So you don't have to say, things are going bad, but I'm going to fake it to make it seem like it's positive. No, things can be bad at that moment in time, but there's always going to be a positive solution for it. So something that I've always mentioned to myself is, Arjo, be the idiot that always finds something positive in a very negative or seemingly negative situation. And when you start doing that, your mind will simply give you solutions on a silver plate, accelerating this success process. I usually don't make these type of videos, so feel free to let me know if you like it, or of course, if you don't like it, then I'm going to send you over as well to a more technical video where we're going to dive into technical concepts. I would highly recommend this video right here. All right, perfect. Thank you.